What is up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel. On this channel, we talk about the markets, and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals, going over S&P 500 and the Nasdaq 100, and also going over 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today, guys, we had a red day all across the board. We cannot make the case that we had a bloodbath, because that wasn't the case. If you guys remember, last year we saw drops in the S&P 500 and the major indices of 8 or 10%. So this was a little red day. However, we had a red day all across the board because the 11 sectors that trade inside the S&P 500 went down today. So the worst performing sector was Russell 2000, which went down 1.38%. Nasdaq went down 0.45%. And so far, the Nasdaq has a 5-day losing streak. We will see if the Nasdaq and the Nasdaq 100 can actually accumulate more than 5 trading sessions in a row going down. Dow Jones went down 0.84% and the S&P 500 went down 0.57%. And if we take a look at the sectors that trade inside the S&P 500, the 11 sectors ended today's trading session in negative territory. We hadn't seen this in quite a while, and the worst performing sectors were energy and the financial sector. And I told you in the video that we posted yesterday that the financial sector was going to be in trouble if we happened to have a better than expected CPI data report. And that's exactly what happened, guys. I told you in the video that we posted yesterday that, according to my opinion, I even used the word impossible. I said what the markets are expecting must be somewhere between 0.4% and 0.5%. I am talking about the increase of the inflation of the consumer price index in August. And I said, if we happen to have a crazy number, way better than expected, let's say 0.3%, and then I corrected myself. I was like, no, I think that 0.3 is going to be impossible. And that's exactly what happened, guys. The CPI data report came out at 0.3%. Those are very good news for tech stocks, growth-oriented stocks, and higher multiple stocks. And I told you, if we happen to have a way better than expected CPI data, then the financial sector is going to take a hit along with the 10-year treasury. And that's exactly what happened today. So the financial sector went down today 1.37%, and the 10-year treasury yield also went down. However, what happened? Why did we have a red day today? So I also said in the video that we posted yesterday that if we had a better than expected CPI data report, then the tech sector was going to be a beneficiary of such situation, and that wasn't the case. So the tech sector ended up going down today 0.13%, and more specifically, Apple went down almost 1%. And I think that the only big tech stock that went up today a little was Microsoft. So we had a situation in which both the financial sector and the tech sector went down on a single day, and that's the main reason why the markets went down today. So in my opinion, guys, this is pretty much seasonal. So if we had a worse than expected inflation report, a worse than expected CPI data report, then the markets would have gone down, because inflation is coming, and because inflation is going to get out of control, and because the Federal Reserve is going to increase interest rates sooner than expected. And on the flip side, we had a way better, I'm not going to say a way better, let's say we had a better CPI data report than expected, and the markets went down supposedly because the CPI data report that came out today is showing that the economy isn't strong enough in order to grow at a sustainable pace. So we were going to go down regardless of whatever the CPI data report showed, guys. So that's the truth of the matter. So the price action that we are seeing right now has to do mainly with the seasonality of the market. So September is for the most part a negative month for the markets, and as of now, this month of September is not an exception to the rule, and that's why we are seeing such a bearish price action in the major indices. So I know that as of now we have a lot of people shorting the markets. In my opinion, guys, and since I am investing at a long term in very expensive stocks, you guys know that I am investing at a long term in NIO and Tesla, I am very happy with the CPI data report that came out. Many people say that the report was cooked and stuff like that, whatever. But the fact that inflation isn't getting out of control, the fact that supposedly the Federal Reserve is going to get away with it's a theory that inflation is going to be transitory, then that is very good news for those who are investing in expensive companies, for those who are investing as of now in companies that trade on higher multiples. So despite the fact that we had a red day all across the board, despite the fact that my portfolios took a hit today, I feel very happy, guys. I think that if inflation doesn't get out of control, as the Federal Reserve states, those are going, that's good news. That's good news as I just said, for those who are investing in disruptive innovation, which is my case. So now let's go ahead and take a look at the S&P 500. And over here, you guys can see a 1-minute chart of the main index of the US. And guys, as soon as we found out about the CPI data report, the futures of the S&P 500 shot up. And we opened today's trading session going up, and take a look at what happened, guys. Once the bulls went up to 44.85, because as I just said in the introduction of this video, the S&P 500 went down today 0.57%, and it closed today's trading session at 4,443 points. So we pushed higher as soon as the trading session opened, and take a look, guys, at how many times the bulls were rejected today. The bulls were rejected on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, on 17 occasions throughout today's trading session. So, and as I have been saying here on the channel, the bears are in total control of the S&P 500. The sentiment of the markets is bearish. Every single time that the bulls tried to go higher, they were rejected over and over and over and over again. As a positive sign for the bulls, and I am quoting over here, positive sign, we can make the case that they managed to close above 44.40. If you guys remember the video that we posted yesterday, I told you, watch out if we happen to see another red day in the S&P 500, watch out for 44.40 as the main area of lower support for the bulls. And that's the area, the level in which the bulls managed to find lower support in today's trading session. Let's not forget that 44.40 is a previous area of overhead resistance in which the bulls of the S&P felt back on August 20th. And they also failed back on August 9 and also back on August 6th. And we are also talking about a former area of lower support that acted as such back on August 12th. So the next very important task for the bears in the S&P 500 would be taking on 4,400, guys. If the bears happen to break 4,400 to the downside at the same time, they are going to be breaking this 180 SMA on the 4-hour chart, and yeah, that would be good night, Irene, no doubt about it. However, guys, take a look at the relative strength index of the S&P 500. It is at 28 points. So the S&P is officially inside oversold territory. So we are going to see a relief rally either tomorrow or on Thursday, the latest, in my opinion. So in terms of resistance for tomorrow's trading session, keep a close watch on 44.73. which is a previous area of lower support that acted as such for the S&P back on August 27 and also back on August 26th. And in terms of support, obviously, guys, 44.40. And if the bears happen to have a phenomenal day tomorrow, which could be the case, even though the relative strength index is very low, then what about the bears taking on 4,400? We will see what happens in the case of the S&P 500, but my good old bears are in total control of the main index of the US. And in the case of the Nasdaq 100, the bears had a very solid day today, guys, because they managed to close below 15,400 points. So the Nasdaq 100 went down today 0.33%, and it closed today's trading session at 15,382 points. The relative strength index of the Nasdaq 100 is at 33 points. We have seen the Nasdaq 100 before trading with its relative strength index at 22 points. So if the bears happen to have a phenomenal day tomorrow, yeah, we could see more downside in the case of the NDX. So, and as I was saying, the fact that 15,400 points was broken to the downside and the fact that we actually closed below 15,400 points is a very good sign for the bears. So the next task for the bears of the Nasdaq 100 would be taking on 15,150 points. This is going to be a very difficult spot for the bears, guys, because 15,150 points, it's a previous area of support that already acted as such for the NDX back on August 23rd. But mind you, we are also talking about a former area of resistance, of overhead resistance, in which the bulls of the NDX failed on 1, 2, 3, 4, 5, 6, and 7 occasions before. So we are talking about a very important area of former overhead resistance that we can suppose, that we can assume from a technical standpoint that is going to provide a good support for the bulls of the Nasdaq 100. So watch out tomorrow for, depending on what price the Nasdaq 100 opens the trading session at, we could be talking about overhead resistance at 15,400 points, or if we happen to open the trading session above 15,400 points, then obviously 15,500 points is going to be the most important area of overhead resistance. To the downside, I am going to keep a close watch on 15,260 points, which is a previous area of lower support that acted as such back on August 26th. And if that area of support happens to be broken to the downside, then watch out for 15,150 points. So very good job today for the bears in the case of the NDX. And now let's go ahead and take a look at AMC Entertainment that didn't have a good day today. AMC went down 0.49% and it closed today's trading session at $47.30. And guys, if we want to see things glass half full, we can make the case that the relative strength index of AMC was getting a bit overheated, and now we can see the RSI at 42 points, which is very healthy from a technical standpoint. So today, the bulls of AMC couldn't manage to close above the lower line of this uptrending channel in which AMC has been trading since August 11. However, guys, the bulls managed to find support right at the 50 SMA on the 4-hour chart at $27.30. So that's very positive. And on top of that, we can see that the relative strength index is at a healthy area or at a healthy level as of now. So tomorrow, once again, the most important task for the bulls of AMC would be taking on $52, which is a previous area of lower support that already acted as such for AMC on 1, 2, 3, 4, 5, and 6 occasions before. And mind you guys, since the relative strength index of AMC is at 42 points, don't be surprised if AMC on good volume and momentum takes on $52 and fills the gap up right away up to the other important area of overhead resistance at $58. That's a move to the upside that would imply AMC going up 22%. This is nothing for AMC when the stock of this company trades on good volume and momentum. Remember that $58 is a previous area of overhead resistance in which the bulls of AMC failed back on June 30th, and they also failed back on June 25th, but we are also talking about a former area of support that acted as such back on June 18th. So watch out tomorrow for AMC, guys, pulling up to $52, taking on that area of overhead resistance and then filling the gap up to $58 because that is definitely in the cards. And now let's go ahead and take a look at Zillow, which is going to be the second stock of this video. And guys, what the heck? Come on. Zillow at $92 pretty much. And I know this is a very expensive stock. When we talk about higher multiple stocks, Zillow is one of those stocks, no doubt about it. And I want to I am going to go over two stocks in this video that are expensive as of now, that are trading on higher multiples, but since we got a better than expected CPI data report, regardless of if that report was cooked or not. But guys, I think that, as I just said, and as I said in the introduction of this video, I am pretty much convinced that the Federal Reserve is going to get away with its transitory inflation theory. And I am going to start taking a look at higher multiple stocks in order to open midterm swing trades. And Zillow is a very nice candidate, guys. Take a look. Zillow reached a new all-time high back on February 16 at $209. That implies that as of now, the stock of this company is trading 56% of its highs. So Zillow went down today 2.74% and it closed today's trading session at $91.90. So if tomorrow, guys, Zillow happens to pay a visit down to $90, which is an area of lower support that already acted as such for Zillow back on August 20th, and it also acted as lower support back on August 17, I am going to be very tempted in order to pick up 50 or 100 shares of Zillow. If I happen to start a trade on Zillow picking up shares at $90, then my price target is going to be at $105. $105. Let me zoom out here a bit, guys. So $105 is a previous area of support that already acted as such for the bulls of Zillow back on August 3rd, but we are also talking about a former area of support that acted on 3 occasions back in May. If I were able to take this trade the way that I am describing it, picking up some shares of Zillow at $90 and selling out of those shares at $105, I could be making a profit of almost 15%. That's a very nice profit. So watch out for Zillow, guys. I truly believe, and despite the fact that this is an expensive stock as of now, but I truly believe that this is a legit discount, and I am going to be picking up some shares at $90, no doubt about it. And now let's go ahead and take a look at Apple. And in the case of Apple, the stock of this company has been under pressure. You guys know that we had a judge in California saying that Apple cannot charge the developers that use the App Store, that Apple cannot intermediate, that Apple cannot be an intermediary when it comes to the developers that sell their services through the App Store. That sounded better. And that started to put downward pressure over Apple. And today we had the official presentation or launch of new Apple devices. And every single time, guys, that Apple presents to the public new products, then we have simply a buy the rumor, sell the news phenomenon, and today was not the exception. So Apple went down today 0.96%, and it closed today's trading session at $148.12. So if the markets tomorrow, guys, happen to have another negative day, which is something that is definitely in the cards, I am going to be waiting for Apple at $145. $145 is a previous area of support that already acted as such for Apple back on August 19, and it also did it back on August 10. And we are also talking about a former area of overhead resistance in which the bulls of Apple were rejected back on July 7 and also back on January 25th. I truly believe, guys, that at $145, we are going to see a lot of buyers stepping in, no doubt about it, in my opinion. I could be mistaken, obviously, I don't have the crystal ball, but I think that $145 is a fair price in order to pick up some shares of Apple. If I happen to start a trade on Apple at $145, then my price target is going to be the next important area of overhead resistance at $152. $152 is a previous area of resistance in which the bulls of Apple felt back on August 16. So I am going to be patient, guys. I know that some people were already buying the dip today, but the sentiment of the market is very bearish, and this is the most important stock of the market. So if the Nasdaq 100 and the Nasdaq and the S&P 500 as well, for that matter, keep on going down, Apple is very likely to visit $145. And if we take a look at the relative strength index of the stock of this company, it is at 32 points. It is already low. So we can make the case that if Apple happens to pay a visit down to $145, its RSI is going to be even lower, and that is going to increase the likelihood for the bulls of Apple to find support at a previous area of support and resistance and then bounce back up. So I am waiting for you, Apple. I am being patient. I am not in a rush. I think that the markets are going lower, and I really want to pick up some shares at $145. And now let's go ahead and take a look at the last stock of this video. And guys, full disclosure, I am going to start a mid-term swing position on EVgo. This is a company that I like a lot. This is a company that is running an actual business, and I am thinking about EVgo like some sort of infrastructure bill play, guys. We know that the House of Representatives is going to pass eventually a new infrastructure bill that is going to pour into the economy at least $500 billion, and EVgo has a network of electric vehicle charging stations all across the US. So I think that a lot of money is coming into these kind of companies. And guys, $8 is a very attractive discount from a mid-term standpoint. So EVgo reached all-time high. This was back in late January at $29. And as of now, the stock of this company is trading 72% of its highs, guys. So what could go wrong? I know. You never know what can go wrong when it comes to investing, right? But I believe that this company is going to be a beneficiary of the approval of the new infrastructure bill. So if tomorrow, guys, and by the way, I didn't say this, so EVgo went down today 3.50%, and it closed today's trading session at $7.99. So if tomorrow, guys, I happen to see EVgo wandering around $8.10, $8, let's say consolidating slightly above $8, which happens to be a former area of lower support that acted as such back on August 20th, I am going to be picking up, I mean, this is an $8 stock, guys. I am going to be picking up 300 or 400 shares of EVgo. If I happen to start a new position or a midterm swing position on EVgo, which is the most likely thing to happen tomorrow, then my price target, I am going to be very patient over here, guys. I am not going to be in a rush because this is going to be, for the most part, a small position inside my portfolio. So I am going to be very patient, as I just said, and therefore my price target is going to be $14.72. $14.72 is a previous area of overhead resistance in which the bulls of EVgo felt back in the beginning of June. They also felt back in late April. They also failed back in late March and in the beginning of April, and lastly they also failed back in the beginning of March. So if I happen, let's do the math over here, guys, if I happen to pick up 300 or 400 shares of EVgo at $8, and if I happen to be able to sell out of those shares eventually at $14.59, I could be making a 44% profit. That's an unbelievable profit, guys. So watch out for EVgo tomorrow, guys. If the stock of this company happens to find a good consolidation slightly above $8, I definitely believe that this could very well be a stock to buy in order to, let's say, have some sort of exposure to the infrastructure bill that is going to be passed anytime sooner rather than later. And with EVgo, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.